Hi, everybody. Hi. Welcome back to another episode of VC TV, which is the Venture Capital TV from LATOKEN. My name is Sunny Mohanty. I'm the Regional Director of LATOKEN based here in Singapore. Today, we have another interesting topic to discuss. It's about blockchain and the impact of blockchain on central banking. So, government, finance ministers, and central banks around the world are increasingly interested in practical questions about how they could implement a retail or a general purpose central bank digital currency, which is a CBDC available to the general public. They want to know more about their technology choices and solution performance. The challenge is to develop a solution that delivers the central bank's policy objectives in terms of functionality and also provides the operational performance. So let's discuss all about blockchain, DLT ledger technology, cryptocurrencies, CBDCs in the space of central bank. And I welcome my guest speakers of the evening tonight. Hi, welcome back, all of you. Flo, Fabio, and Gianpaolo, back on VC.
Hi, Sunny.
Hello, Flo. How are you?
Very good, thank you.
Great. Let's have a quick round of intro first. Let's start with Flo.
Okay, hi everybody. My name is Flo, originally from Germany, now here in the beautiful, sunny crypto island of Malta. I'm a tech entrepreneur, have started 4 tech startups in my life. I'm an investor in renewable energy and in sustainability, and recently started my 5th startup, which is called NECO. It's a currency for the common good. We generate profits for our members, we provide universal basic income, and we protect the climate. Our vision is to build a new financial system that serves the people and the planet. And I'm happy to be here on the show again to talk about blockchain. I think this is a topic that is very related to me. I'm originally a software developer. And so I've looked into blockchain recently, and in my company, we're developing our own platform called StackChain, which is a faster and more efficient and more secure version of blockchain that we're going to release in the next years.
Wow.
So happy to be on this call.
Thank you, Flo, and happy to have you back on VCTV. Excellent. Mm-hmm. Next, I have Fabio. Hi, Fabio. How are you? Welcome back. Let's have a quick round of intro.
Thanks, Sonny. I'm an economist by training. I have a PhD from the University of Chicago with a dissertation in finance. And in my professional life, I started with the International Monetary Fund. Then I moved to the European Central Bank for the launch of the euro. And then I moved to the private sector, to Goldman Sachs in London. And later, I started a career in the Arabian Gulf, working for sovereign institutions in Qatar, Dubai, and my last stint, which lasted 8 years, was with the Oman Investment Fund, which is a sovereign wealth fund of the Sultanate of Oman. Now, I'm a partner in an investment bank based in New York, with offices in Dubai and Hong Kong. And the name is Golden Eagle. In Dubai and Hong Kong, we operate under the brand Amintad. And we essentially focus on raising capital for innovative firms all around the world.
All right, great. Thank you, Fabio. And as always, happy to have you on VCTV to hear your insights. Thank you. Next, I have Gianpaolo. Hi, Gianpaolo. Welcome back. How are you today?
Hi, Sunny. Welcome, everyone. Thank you for having me here. This is Gianpaolo Parigi, and I'm an investor, venture capitalist, private equity specialist, and chairman of a single-family office. I'm at the co-head of a private capital group in London. I'm a partner in a private equity group in California. Our single-family office is in New York. And I've been in the investment banking, VC, PE space 30 years, spent nearly equally across the pond between the US and Europe, but I had a good fortune of dealing and closing deals in about 77 countries in 5 continents. So Really happy to be here. Last but not least, I'm also on the advisory board of a Singapore-based decentralized finance platform. So happy to be here today and discuss some of the topics that are really at heart, for the audience and for all of us here on the panel. Back to you, Sunny.
Thank you, Gianpaolo. Thank you for that intro. Great, we are all set with the introductions of the speakers. So today's topic is very interesting, and it's obviously everybody is discussing about CBDCs everywhere, and besides Bitcoin and other cryptocurrencies, which are making news, and the legal tender, Bitcoin becoming a legal tender for one of the countries, El Salvador, is making news as well. So in middle of all these news that's going around, I just want to know how governments or the central banks, how and why the central banks are enabling blockchain-based services. As an introductory question, Flo.
Yeah, I was quite surprised at a meeting in Vienna last year that I heard a person from the European Central Bank speaking really positively about blockchain, because originally I thought, there's this a slight animosity between central banks and decentralized blockchain. There's a obvious contradiction. But yeah, I think many central banks, especially here in Europe, are quite open-minded towards this, because they see that this is a technology we're moving towards. They see the trend coming, and rather than being rolled over by the trend, they want to go with it and open up. Obviously, there's going to be a few challenges for them as well, because there will be some important changes necessary in terms of how they manage money. Also, with regards to fractional reserve banking by banks, if they release a CBDC, how will the banks be affected by this? Because most of the money today is actually created by banks, not by central banks. And other challenges, as you mentioned in the beginning, like the performance of blockchain still has some areas of improvement. I wonder how Salvador will deal with an entire country using blockchain if we only get 7 transactions per second through the system. So there's definitely also a technical side on it that needs to be fixed. But I see that especially in Europe, the governments and the central banks are quite open, and that's very promising. They see the benefits of it. They see that this is a trend. And so I'm really looking forward to seeing and experiencing what will happen in the next years.
Yeah, that's good news coming from Europe, actually. Thank you, Flo, for that insights. Fabio, what's happening with central banks in the rest of the world? So why are they focusing on enabling blockchain-based services? Fabio, you're on mute. You're on mute.
Here I am. I'm quite skeptical, because what's the purpose of blockchain? Is to have a decentralized validation of transactions. But if central banks launch a digital currency, there is no need for validation through blockchain. There's no need for a decentralized system, because it will be the authority, central authority, in this case the central bank, which will manage the integrity of the database, because at the end of the day, the blockchain is a way to manage the changes in a database and keeping the record possibly for the eternity. Central banks, on the other side, are trying to launch these digital currencies because they want to facilitate the payment system. This is not a key to cryptocurrencies, because it will be in practice a checking account with the central bank available to any citizen within a country or within jurisdiction, and people will be able to use this digital euro, digital yuan, digital dollar, digital pound to make their payments within a country or maybe abroad, if there will be some sort of international agreement. This would be cutting a big chunk of the current commercial bank business, because the commercial banks are making money on each transaction, on each payment from their clients to somebody else, domestically or abroad. It is another way for central banks to modernize the payment system, because we are still living in a world where these payments are managed by quite obsolete systems like SWIFT and the like. So it's a way for central bank to push the commercial bank to embrace modernity. The commercial banks are already studying the matter, but so far they haven't made visible progress, at least not the progress that benefits the retail customers. So, bottom line, the digital currencies issued by central banks will not be a cryptocurrency, will be essentially an alternative to the current paper money, which can be used to make electronic payments among people or among businesses. No need, by the way, to adopt a blockchain, and I would be very suspicious if the central bank adopts blockchain-based technology for digital currencies. Why? Because the transaction will be recorded for a very long time, and this depends on our personal freedom, because when the government knows where you spend your money, how much money you spend, who did you send your money to, etc., etc., one day that information can be used against you.
I think, I think, Fabio, you've taken us through commercial banks, central bank, retail CBDCs. So great start. Thank you so much for sharing those insights. I still have a question. What's the difference between a CBDC and a digital dollar or a digital euros? Are they the same, or why they have a different name? But anyways, we can come to that later. Gianpaolo, over to you, please, with the same question.
Yes, well, I think it's in the natural orders of the events. The world is, based on technology. It has always been based on technology. Over the last years, the digital transformation has affected across the board every business entity, and the governments are consisting of entities themselves. Blockchain and the development based on a blockchain architecture definitely have told the governments several things. That was probably the forward path. That was the mesh of the 21st century in terms of architecture for a lot of things, and not for the central bank digital currencies as we'll see, but definitely it's been an inspiration. So governments have reacted, both inspired and I would say led by concern that the fiat currency might somewhat remain behind and be a laggard. We know already from the first government that has successfully implemented the central bank digital currency, that country being China, that actually they have not resorted to use blockchain just because of implicit technology limitations on the blockchain architecture that could not, let's put it in layman's terms, could not handle the traffic that is required to pass per unit of time on the system. So they have adopted a different system, as we know. The United States and the European Union are following suit, and possibly all major economies in the world will adapt to that. But I don't see that as a radical change of anything. I just see that we are abandoning the paper fiat currency for a digital fiat currency. Nothing extravagant, nothing fancy. It's just, comes with the territory. And also it comes as a result of the greater transparency and regulatory frameworks that have been adopted, the most recent of which is, dating back 4 years with the exchange of information among countries. There's a full transparency. At least now the signatories to that important treaty are over 110 countries, I think, to my latest count of a few months ago. And anyway, it already includes, in terms of GDP, over 95% of the countries in the world by GDP terms. So basically anything that moves around the world will be controlled. I don't think it's for us to say whether that is good or bad. I think that a certain modicum of regulations is necessary if you want to have financial inclusion and the democratization of the financial system. I know that may sound counterintuitive because, the advocates of decentralizations most of them have been in favor of any control. But I don't think we can create a system which will promote equality and fairness if there is not some implicit and explicit preordained checks and balances in the system. I mean, because otherwise the possibilities of deviations for reasons that are, favoring only certain elites would be predominant. And so I welcome, coming from the investment banking and from the regulated market, as I say, a certain degree of regulatory frameworks coming with it. Because at the end of the day, technology on the one hand and the markets on the other hand find, like anything else in nature, a state of balance. And the technology will evolve trying to achieve a momentum which is sustainable. The markets will keep wanting instruments to do business, to exchange goods, services, trade, and even for personal reasons that is, easy to access, as cheap as possible, commoditized in a way. So we are going simply toward that. And in this big scheme of things, blockchain has been an inspiration. I mean, in our decentralized financial platform, which is fully regulated in Singapore, although we were not obliged to do certain things, we decided to do them. And we raised capital overnight very quickly just because we were regulated. Hadn't we been regulated, probably things would have gone differently. So it all depends, what you want as an operator. I mean, of course, operators that come like us from regulated markets, we are in favor of decentralization. We're in favor of reducing the intervention of the intermediary. But make no mistakes. In a digital world, certain intermediaries are simply repositioning themselves backstage, and they still control the knots. So maybe they are less visible than in the physical world of finance, but they are nonetheless as efficient, effective, and powerful as they were in the 20th century. So I think that there's a lot of demagoguery and a lot of mainstream information that it's not really seeing the reality for what it is. Of course, there are new actors coming out because there are digital financial institutions that are dwarfing hard assets institutions that have been around for over a century or more. And they did this, they beat the competition in just a mere few years span or maybe a decade span. But the world will show more and more of this at the pace of technology is not fathomable anymore, because now we have reached a level in which the incremental innovations are so many that a human mind cannot cope with all of them at once. So it's very difficult to predict what would be the possible. I believe that systems have to be balanced, and at the end of the day, the orientations of government, regulators, central banks, and the financial markets will have to blend together with the needs of the markets, both consumers and corporates. So I know it's a topic that would take 600 of these panels, but I think
Yeah.
for now I'll leave it to this. Thank you, Sandy.
Thank you, Gianpaolo. You rightly said this is going to take forever if you were to discuss about CBDC's use cases, especially from the central bank government perspective. Okay, keeping that currency aside, we have blockchain and we have currency. So, what are the interesting use cases for blockchain-based applications other than a currency for central banks? Flo?
Yeah, I think the challenge that central banks have today is essentially have very limited control over the actual money supply. As I said, most of the money is created by private banks. The only kind of parameters that central banks can control is the interest rates. So the banks can still decide whether they want to just create more. And this is why we have inflation. We see a lot of banks pumping, creating more money by creating loans. And that adds, like in Europe, I think 10% of money supply per year to our money supply, and which is one of the reasons for inflation. So central banks have one core value that they want to achieve, which is stability. And this counter kind of challenges the stability by not being able to control the money supply. So when they change towards a CBDC or whatever digital currency they control, they have the chance to really control the money supply. So they have a more direct way of managing the system, which might be very helpful. They also have more transparency, and it's from a technical perspective, setting aside the challenges with the speed in blockchain, it provides a way to make transactions more transparent. So you can see where the money goes, you can monitor money flow. So there are a lot of interesting appliances for this, especially when it comes to fraud, corruption. So, a lot of people are afraid of being overly controlled, and I do understand, but on the other side, some transparency is important to prevent more corruption and fraud, and we have plenty of that in our world today. So these are areas where blockchain could come in. There are other challenges with blockchain right now. GDPR, a blockchain is not compliant with GDPR, at least most of them. They are public. You don't have the chance to forget something. The right to be forgotten is not possible on a blockchain. And you, at least on a permissionless blockchain, you cannot control who has access to the blockchain and who shares the data. So I think there's a few challenging technical challenges that central banks will have to master. But overall, I can see that they're looking for more control, more transparency over the currency. And whether that's good or bad, obviously, depends on the final implementation. But these are the advantages that the central banks probably see.
Absolutely, Flo. Thank you so much for sharing those insights. Great insights. Fabio, over to you.
I'll be quite, amused by the fact that blockchain, cryptocurrencies, centralized finance had started with the libertarian dream of safe, authority-less transaction, completely anonymous, fast and reliable. And then we end up with a central bank, the government authority that knows everything you do, every penny you spend, keep that record for decades, and can come and haunt you anytime. The benefit of preventing corruption or other illegal activity is only illusory, because obviously, if you want to bribe an official, you wouldn't pay with through a central bank account. You do it in cash, and if you don't have dollar or euro cash, you'll do it with another currency. It can be your money real, it can be the dirham, it can be the Chilean peso, it can be anything that still remains in paper form. Or you can do it in diamonds, you can do it in gold. So the illegal activities will not be prevented by central bank digital currency. Essentially, this whole frenzy started because the Chinese central bank decided to study and then introduce the digital yuan. And it's not an sense that an authoritarian government had that idea, because it's a form of control. And furthermore, since the yuan is not freely tradable on international market, this digital yuan was a way to somehow circumvent, not circumvent, but to reduce the impact of these limitations, so that people could still use it to make purchases abroad, but the government would retain a control on who does what, so that whenever they would see something the authorities or whatever bureaucrat like, the Chinese government would be able to intervene. Other major central bank started to get into this, let's call it business, although it's not business, start to start this function under pressure from government, under pressure from various quarters. But as of now, neither the ECB nor the Fed have come up with a coherent plan to introduce currencies. I guess the Bank of England is among, let's say, the Western central bank, the one that has a more advanced, is at a more advanced stage. The other are just starting, and again, the criticism is mounting, and as people realize what it entails, I'm not sure that enthusiasm will spread in the general population. This being said, there is another issue that the central bank will look at in the realm of the currencies, and it's the credit system. The central bank maintain the control over the money supply through the control over the emission, let's say money printing, to use a simplified version, and through the control over the banking system, over which they exert a very strict vigilance. Now, if there were to expand, if at some point the cryptocurrencies were to give rise to a credit system outside the reach of central bank, this would pose a threat to price stability and to the monetary policy. So that's another reason why central banks have come to the decision of issuing digital currencies in order to reduce the appeal for the general population of using non-bank means of payment. That's the picture, and that's why in general governments, and in particular central banks, don't like the cryptosphere, because that can thwart or derail completely the function of the central bank and can lead to a complete loss of control over the money supply.
Fabio, I think that's what the future will be. I think the impact of blockchain on central banking will essentially disappear sooner or later over the next decade or so. However, I also think they will still try to to use the technology to use the advantage of more control and more transparency on the other side. So I think we will have two things, but over the long term, I think I agree with you. The central bank will disappear, and we will have a more decentralized way of managing money.
No, because it can't. I mean, the credit system is not a technology issue. It's an institutional set of rules, regulation, and whatever else. And a credit system hinges on the stability of the currency. If you have cryptocurrencies that oscillate by 50% in a few months, you won't be able to build credit system because nobody in his right mind will ever lend or borrow long term, not knowing how much they will have to repay, say, in a year or 5 years. So that's why central banks are extremely wary of the creation of decentralized financial system based on cryptocurrency. Because the financial system is not a matter of sending money from one place to the other. It's a matter of ensuring that once you send money, you get it back according to a contractual arrangement. In order to get it back, you need institutions. You need tribunals, you need courts, you need authorities, you need police, you need a whole environment that guarantees your property rights. Otherwise, you lend money, I don't know, from Australia to Argentina. The Argentina guy says, bye-bye, and you're left with nothing in hand. So what most people focus on technology don't understand is that the financial system hinges on a huge set of rules, regulations, law, international agreements, business practice, and so on and so forth, which need to be reconstructed in the decentralized finance world, and it will take time. It won't happen in 1 year. It will not happen in maybe 5 years. It might happen in 10 to 20 years. But you need institutions, maybe not institutions sponsored by government, might be institutions sponsored by private parties, as it used to be in the 14th century and until the central banks center stage. So we need to be aware of this challenge, and everybody who dreams of a crypto sphere challenging central banks and the traditional finance need to be aware of the difficulties.
I think it's a good discussion. John Paul, I'll come to you with that question, but I just have a question. I have a very intriguing question, and I've always had this question. So once a central bank issues their central bank digital currency, which is their own digital currency, is it going to be available to retail consumers, not via the intermediary banks? Do you think there's a possibility it's going to happen? So talking about disappearance of central banks, I think the other banks, the commercial banks, may disappear. So would you? So what do you think?
I agree too. Both will probably disappear. I think in the end, Sonny, I think with our cryptocurrencies, we give the choice now to the users who will decide which currencies they use and which they won't. Right now, we don't have a choice. You kind of, take the euro or don't, be happy with it. A currency that constantly loses value, nobody would invest in such a currency. So users will be able to decide, and there will be, I think, different currencies in the world that, depending on also use case, not just one currency for everything, but also maybe for certain industries. So what we will see is that that the population will get the choice to decide which currency they accept. And so that puts some competition on a monopoly that we've had before. So far, the central banks had the monopoly on money. Now, they see the monopoly going away. So the question is, obviously, will they be able to catch up? Will they be able to provide something, a currency that attracts users? If you issue the same currency, as Gianpaolo said, it will be the same currency like the euro, just digital. That makes no difference. It's still a currency that constantly loses value. We still have much debt behind it, and the other issues that come with it. So I think, in order to compete in the future, they will need to come up with something that is better than our current system. I think that will be challenging.
Yeah, the theory obviously fits in very well. Gianpaolo, I'll come to you. We've got a question from one of the viewers. What is the intention of Elon Musk in declaring war on the BTC? Ooh, I don't understand the reason for this revolt. Soon he was one of the supporters. Okay, Elon. Okay, it's about Tesla and Elon Musk tweet and everything. Oh, who is going to take that?
Well, there are several threads of the very interesting conversation that I would like to reconnect to. As far as Elon Musk is concerned, I think he should be the one answering the question. I mean, one can think a number of possible reasons for why, an intelligent person with a lot of stake does what he does in this case. But again, not up to me to elaborate anyway. He was in the North America Bitcoin Mining Council with Mike Saylor. And, I think that BTC, is continuing, in his race towards supremacy to be the substitute of gold in cyberspace, as Michael Saylor, put it, quote unquote. And that is clear. I think even to the least knowledgeable person around the financial industry, and everybody who do not want to see, everybody who doesn't want to see that is simply in denial. So there's an arrow, there's a vector, a direction of where the market is going with what it does. For BTC is what I said. It's going to substitute gold. It's a store of value, and it's not going to be a cryptocurrency in the sense that maybe even a lot of us would have thought it could have been, and it wasn't up to even March 2020. It is by now clear, since March 2020, that it is not. That it's going to be a store of value, and so competing primarily against gold. In fact, de facto having replaced gold with several hundred millions of people in the world, because if you count the early adopters of Bitcoins, the investors in Bitcoin, and everybody else who has not yet invested in Bitcoin but will, and for sure won't invest in gold, you could see that you are mobilizing, in maybe the next few years, about 1 billion customers invested even with a single unit in Bitcoin, not in gold. Now that for Bitcoin, when it comes to the scenarios that we can have with the central banks and the financial system, there are a number of scenarios that are possible. I would like to take it where Flo left it, because that's a topic that is very dear to me, the quantitative easing, in layman's terms, somebody would say, in brackets, the indiscriminate printing of money, which, most of the largest economies, and in this case, not only the US and the European Union, but also others have been doing over the last nearly 15 years. It has been the crutches of the economy, as I say, but a body cannot sustain itself on crutches for a protracted time. Either it heals up and it can walk on its own legs, or it won't. crutches are just meant to be temporary. And the quantitative easing has done some good to the market, and it's creating a lot of imbalances and a lot of aggravation, because, as I said repeatedly in the past, if we are, like Flo mentioned, for example, this year in the European Union area, 10% new monetary mass coming into the system, and in the US could be up to 20%. And over the next 3 to 4 years, those two central banks have already publicly declared that they will keep printing. We are going to debase our currency of anything between 10 and 20% on an annual basis. And if you project it on an Excel a spreadsheet, you don't take a rocket scientist to see where we're going with the actual disaster that we are inflicting to the economy. Now, to the economy of the largest powerhouses in the world in terms of industry and finance. But the rest of the world will have even more problems, because if we keep going, with the distinction of tier 2 countries and tier 3 countries, everybody else will have in tier 2 countries a debase of their currency of about 40 to 50% on an annual basis over the next few years. And the tier 3 countries, they will really be wiped out. Venezuela, Syria, Lebanon, and a number of other countries, their currency will not exist anymore, because there's nothing, if you think of Venezuela, a few weeks ago at an inflation of 53 million %. I mean, what can you do? I mean, the full methodology of the investments world as we know it, I would say it loses its meaning when we are faced with this tsunami. I mean, how can you invest as a sophisticated, accredited investor in economies that have been violated, destroyed, and brought down, torn down in pieces, by the changes of the economy? So I think that more than where the digital versus the physical currency is going to be, which is just, a discussion that can only enamor the technical people that are really, happy with that. I take a look at the big picture and say, what type of world we're building? Because, regardless that is physical with a hard currency or digital hard currency, the reality is if we keep doing what we're doing, we're sending belly up 95% of the world economy. Now, at the beginning of 2021, I said, even in this nice panels on LATOKEN, that in the second half of this year, we would have seen a concentration of capital surging. And the latest decisions by the G7 in Cornwall yesterday are the final statement and the seal to what I said, at the beginning of the year. Now the world is taking a posture where, it's a face-off. Really, we see the Western capital markets having taken now a clear stance on how things are going to go. 3/5 of the world are ruled by regimes that are not democratic. If we think after all we've been saying and doing in 20 years, 30 years of globalization, we look like we are still back to square one, and that the world hasn't improved a lot. I think capital will remain in countries where there is a rule of law, where the governments are not, governed by crony capitalism and by rogue elites. It's a very clear message. Also, the ones that for those who can decode it, the ones that the G7 yesterday has launched, and this really dictates where the capital is going to be, and it's not going to go to a lot of countries in the world, whether or not they blockchain or physical currency. The reality that capital is polarized, and it's aggregating itself on just a very limited number of cathodes in the system. And so this really poses a lot of questions and issues, and technology could do a lot. It must do a lot, but technology itself cannot push the world forward if there is not a unity of intent at the political level internationally to do things in a certain way. And by saying this, I'm not saying that I am in disagreement with what they determined at the G7 yesterday. Quite the contrary. I think that there are a number of countries that have to come to their senses and operate by what we cold compliance rather than their own complacency. So I think that this is really, unfortunately, disparaging for the world at large. But if we do ignore this, then we don't see the elephant in the room. Thank you.
Thank you, Gianpaolo. Thank you for great insights and overview of the monetary policies, financial systems, banking systems. So thank you so much, all of you, for that. Thank you, Anderson, Carlos, as well, for watching our show and putting on comments and asking questions to our speakers. Really appreciate that. I have a very interesting question coming from another, viewer. What entity is best placed to resolve how CBDCs, the central bank digital currencies, will interact with private sector cryptocurrencies? Flo?
Yeah, that's a very good question. I run a cryptocurrency where we make decisions collectively. So all our users collectively decide how much money to create and how to distribute the money and the value of the currency. So I'm a big believer that the best authority to make these decisions is collective intelligence. So a very direct democratic way where it's not like a representative democracy where you have elected people who are then making decisions on their own, but to have all stakeholders directly involved in these decision-making processes. So what we have set up for this reason is a decentralized collective organization. It means an organization that has a separation of powers, an executive power that does the actions, and a legislative power, the parliament, which in our example is Collexa, a system of collective intelligence that allows all users to vote on all these topics. How much money, what's the value of the currency, where should it go, people plan a profit. And then a judicial power, similar to a Supreme Court, that has some rules, in our example, a constitution with values in it. And these values have to be preserved. So I think this setup that, by coincidence, we have chosen in our organization as well, might be the most beneficial in terms of direct democratic decisions. Also in the most intelligent way, because collective intelligence usually is more intelligent than the individual, especially if you look at some of our politicians. I think, there's definitely some room of improvement. So I'm hoping that, I would suggest that something using collective intelligence should be making such decisions.
Absolutely. Collective intelligence decisions. Of course. Thank you so much, Flo. Fabio?
I'll take a step back and clear the air from a number of misconceptions. The basement of the currency is an enormous problem. The quantitative easing, the ultra lax monetary policy, these are all arguments very compelling, to which I subscribe, and the idea that you can grow an economy or the economy through that is a total boss. This being said, it's illusory to hope or believe that you can say, okay, stop the world, I want to get off. And I will accept, I will not touch dollars, I will not touch euro, I will not deal in fiat currencies. I will only use cryptocurrencies, Bitcoin, Ethereum, whatever. And this way, I will avoid the consequences of the crazy central bank policy, the monetary policy out of control, and all the likes. It will not happen. Because the debasement of the currency doesn't come out of the blue, doesn't come because a central banker or group of central bankers wakes up in the morning and decides, oh, I want to issue a few $1 trillion worth of liquidity. It comes because there is a political issue at the very core. That money is issued to pay pension, healthcare, welfare, civil service, and so on and so forth. What is out of control is not per se monetary policy, it's the fiscal policy to which, in a situation of emergency, monetary policy is forced to support. So we are facing political conundrums, not so much monetary policy conundrums. And you cannot insulate a portion of the world economy by pushing transactions, production, trade into the crypto sphere, because it will not happen.
Yeah.
So we have to be aware of the political realities that have caused this historically unprecedented situation with bloated balance sheets of the central banks and no end in sight, as John was correctly pointed out. But that, unfortunately, doesn't lend itself. That problem cannot be solved through separating one portion of the economy from the rest. Unfortunately, it's a political stalemate that needs to be addressed with political means. So one has to start working in that direction, and there is no other solution in my view.
Wow, thank you so much. Thank you so much, Fabio, for sharing your views as well on this. Thank you, Flo, as well. Gianpaolo, let's take your view on this.
I like to keep it short and to the point. I reconnect again to what Flo said. I think an aggregated consensus might be the silver lining in this case, and I would leave it at that. I think we need to reach the consensus, and consensus can be reached on a common set of values that the world decides to, sign upon and act upon. And it has been happening in the past, even recently, and then we've lost again the north. I think we need to go in that direction, because otherwise I don't see very many solutions. Technology per se is just a means to an end, it's not the solution. Thank you.
Great. Thank you, Gianpaolo, Flo, and Fabio. Let's just summarize before wrapping up. Closing thoughts. Flo.
Okay, yeah, I think you will see CDBCs coming out, but I think on the long term, guys, the trend is towards end of this system, start of a new system, and it's time, because the system is collapsing, and the system is not working well. It's financially not working well. It's not sustainable. It's also socially unsustainable and environmentally. To come back to the question of Bitcoin, the reason I think why Elon Musk went out of Bitcoin is very clear. Carbon footprint of over 400 kilograms per transaction. It's like a 3-hour flight per transaction. Is just not in line when you have a value of sustainability. So I think our current system is on the verge of collapse. It was already about to collapse 10 years ago in the financial crisis. It was delayed, but nothing has been changed. Now I think the central banks, even if they come up with CDBCs, I don't think it will change anything majorly. Now that we all have the choice to choose our own currency, we can choose which system we want to have in the future. So on the long term, I think we will see central banks disappear and cryptocurrencies, really truly decentralized cryptocurrencies taking over.
Thank you, Flo. That's more ideal world to live in, I guess. Thank you. Choose my own currency. How about that?
I like that idea much better than, central bank control again for another decade. No, I think it's time for a change.
Great thoughts. Thank you so much, Flo. Fabio, your closing thoughts, please.
Yeah, summarize most of what I said today. I want to stress that a monetary system, a financial system, financial architecture is based on trust. Trust between the lender and the borrower, trust among the market participants, trust in the value of the means of exchange, means of payment, and all in this trust must be built, must be strengthened and enforced by institutions, because there is no way that you can have a sort of individualistic libertarian system self-regulating. It has never happened. It will never happen. So the challenge for those who want to build an alternative to the current financial system, central bank dominated monetary policy, have to think in those terms. That's what we are doing, by the way. It's not something that is outside of our reach. It will take time, though, because trust requires time. There is no system that has started and has gained the trust of the participants by a snap of fingers. So you need to, for example, try to issue cryptocurrencies that have a real anchor in the real world. You need to design financial institutions, credit institutions, banks, call it whatever you want, that are robust to shocks. You need to set up a system of information which is reliable on who are the participants to this market. So you have to have a rating system, for example, for the token for currencies and for any other instrument in the crypto sphere, and little by little, setting some strongholds here and there, you will be connected dots, and in a matter of 10, maybe 15 years, you can hope to design a system that is as reliable and as trustworthy as the financial system, traditional financial system, with better characteristics, for example, robust to the debasement of the currency, which means robust and able to withstand fiscal policy shocks.
Yeah, thank you. I think reliability, trust, definitely. Fabio, great points. Great closing remarks as well. Thank you.
I need to go because I have another conference call, so I want to say bye to everybody and to our viewers. It's always a pleasure to be with you.
Take care. See you later. Bye.
Take care.
Thank you. Gianpaolo, coming over to you. Your closing
thoughts.
Yeah,
we're on the hour. I rest my case. I mean, I don't have anything more to add. Thank you. Back to you, Sunny. It was a pleasure to be here. Thank you, Flo. Thank you, Fabio. And thanks for the audience for every, comments that they may want to post. We'll be able to respond to any of those comments later. Thank you.
Thank you. Good to see you. Good to see you, Gianpaolo, after a long break. And I'll be back again on another episode of VCTV soon. Till then, keep watching VCTV and take care of yourself.